Good morning, everybody. Welcome to the Flow Show, Wednesday, the 28th of May. And we're all ready to do better with the markets once again. Kay, you got your gun strapped on?
My guns.
Your guns.
Oh, my
God. Your water pistol.
Something different, which I'm not going to name here. Morning, Ryan. Morning, everybody. Yeah, we're all ready, mate. All ready for month end and whatever it may bring us as surprises. So we are ready to go.
Good, good. Well, let's get cracking. And month end is when this offer is going to finish for a 40% sale off a monthly subscription, I've been told. So you've only got its value date, end of sale. Let's call it that today. So get in quick or you're going to miss it. Right, let's get cracking. Bank of Japan's Ueda says he's monitoring bond markets closely amid all these rate swings. We had a pretty weak 40-year auction in Japan overnight. No real surprise. Bid to cover was right down, so demand dropping off, such is the mood in the market at the moment. What it has done, though, it's put a little bit of a low in Japanese yields for now. Just look at that 40s, since that was the auction. So speaking yesterday, we want to see where this pulled back to, whether it's going to keep going or not. At the moment, it's stopped. It's had a couple of goes of breaking through. Just again, talking this 40s through this 3.3% area. Couldn't hold it. And now we're seeing a bounce. And no surprise that when we're getting the lows in yields here in this move, we're getting a high in dollar yen to match it. So as we were saying yesterday, if you're trading this one, you've got to watch what's happening in Japan, particularly over the Asia session. Then we get into Europe, and Europe goes, well, we don't know what we're going to do with it now. And then the US will come in and go, right, we'll start trading the dollar side of things. So know the different phases that dollar yen moves through day to day right now, or session to session right now. So if you've got a position at the end of the US session, then you need to be careful what happens in the Asia session. But right now, yields are still driving the bus. And as we say, the bottoming short-term otherwise in Japanese yields is also producing a top in dollar yen. Couldn't quite get near that 145 area. Kay, that auction, as I said, it's really a big surprise. The market not yet heeding the sources piece that they may change the duration of sales. So is this just a dead cat bounce in yields, or is this a bottom?
Yeah, what we were talking about yesterday. I think that auction is a bit the dog running after its tail. The market doesn't want to buy. MOF reduces issuances, but the market doesn't want to buy where there is going to be even less of it. So I still think part of the answer is probably going to lie with the Bank of Japan if they come in, do some unscheduled buying to calm the nerves. But in the meantime, we've already seen those yields coming down quite a bit. So it may all quiet down a bit, perhaps, especially over month end. It's going to be a difficult thing to plan what's going to happen over month end. Do we see an acceleration on those yields because of? Traditionally, though, the month of May is not your biggest month for Japanese flows, but well, of course, you could never discount anything in these markets which change every day. How we at the end of it is a very good question. I really don't have the answer to that question right now, but I do think that there is something which is or will likely be interesting, is to see how much they will they be issuing on the shorter end, and there we are getting closer to what the Japanese investors are most invested in, and also what it will say, for the interest rate differentials with, for instance, the US and the EU, and also what it means for the Bank of Japan. Imagine that they go on the shorter end, like the twos, the ones, the threes, and that may have an impact on what the Bank of Japan will do as well. Maybe not straight away with the monetary policy, but also there on the bond buying front, because we can expect an increase in short-term issuances, which in turn may then create some imbalances there. So the story is by no means over, in my opinion.
Yeah, absolutely, mate. So watch this space. We don't know what's going to happen from this point. Oh, excuse me, choking again. We do have a bit better of an idea of what's happening with the steel deal, the Nippon Steel deal, to get their teeth into US steel. One idea that's being floated about is that the US government will take what they're calling a golden handshake portion of the US Steel shares, so it won't be solely owned by Nippon Steel. The US will retain some control in that, but as I say, that's broad strokes of what we're looking at from that side of things anyway. As Kay mentioned in the chat room yesterday, may be something for M&A moves to happen, but the market knows about it now, so I'm not sure what's going to happen if it gets confirmed. But if they suddenly say, yeah, they're ponying up 10 billion cash, you might see a move in dollar yen on that basis. We had some data out of Australia overnight, this CPI data, and it came in unchanged in the end at 2.4%. One of the trimmed mean numbers went up, though, to 2.8% from 2.7%. Across the water in New Zealand, the RBNZ, they cut their rate by 25 pips to 3.25 as expected. Something that was slightly different, though, they had to vote on that rate cut. They decide by consensus, but if there's not a consensus, then they put it to a vote just to seal the deal. So the vote was 5-1 in favour of that 25 pip cut. So at least one member of the board seeing the need not to cut rates again. Their forecasts for the OCR came down slightly, 3.12 for the rate in September 2025 versus 3.23%, and pretty much it all knocked down lower for the various months in 2026 as well. They do June and September forecast there. It's not this is where exactly we see the interest rate in those times. It's just how they see the progression of rates towards those levels. So it's not an indication that they will cut down to those levels. In the statement, they said they discussed holding the OCR at 3.5 or reducing it. They said inflation is within their target band, and they're well placed to respond to developments. And the effects of prior cuts since August 2024 are yet to fully materialise. RBNZ Chief Hawkesby says the vote today is a healthy sign of the MPC process, explaining away why they had to vote. Overall, the market has, as is often the case with the Kiwi dollar, you get a rate cut or a rate hike and the Kiwi moves the other way. It does look like they are potentially closer to a pause now, particularly that comment that rates are within their target band. Obviously, there's lots of global growth risks and trade risks and all that stuff they need to watch. So they're still data dependent. But Kay, as suspected yesterday, it was a less dovish outcome that we take from that meeting moving forward.
Yeah, absolutely. Expectations for rate cuts do not match what the market was expecting, and that's the non-dovish part of it. Market was hoping for them to signal some deeper cuts. They do signal that there is still something in the pipe, but not as much as the market was expecting. It reflects the wait and see attitude that most of those central banks are having right now. And that's where we are then. I think a bit logic, perhaps the market was hoping for the Kiwi to get down below 59, never went even close and bounced straight away. Well, that's where we are. Nothing much more to mention about that. It all depends on what the commodities will do and what eventually what or potentially the month-end flows will bring us, starting today, maybe on the dollar side, and then for the rest of the week, um, perhaps to the other side. But we will see about it. Yeah. So yeah, as you said, less dovish than expected. That's it.
Thank you very much, mate. Right, we shall move on. Lost myself. Just a little bit of data from yesterday. Just while we're on the flow show, we had the latest UK CBI retail sales numbers. If I can find it, where is it? 11 o'clock. There we go. So this is the retail data. This one tends to be a bit, as you can see, glass half empty for this. But it's come in. We saw a -8, which was a big jump. We've seen retail sales pretty positive for 2025, going against what these numbers saying. But anyway, we saw a dip, -27 in May from a -8 previously. So that was a better number. But as you see, lots of negatives. We'll see whether that impacts the next retail sales numbers in the UK. But as I said, this was looking crap for all of the year, yet we've seen decent retail sales growth anyway. Right, moving on. SMB Schlegel says we cannot rule out negative Swiss inflation in the coming months. A bit of a rinse and repeat constantly about seeing negative rates. It's almost like they're going to talk it into reality. Also says we see a certain easing in the Swiss francs exchange rate. German Finance Minister Klingbeil says we are starting to implement the special fund and want to massively increase investment to around 110 billion euros. It was a hawkish day for ECB bonds yesterday. ECB Hawky Holtzman has said that he wants to see a rate pause until September. He's been banging that drum recently of late. ECB's Patsalidis says an aggressive rate cut appears unwarranted at this time. Another hawk, ECB's Nagel, says it's too soon to say if rates will be cut again next month. Then offered a bit of a no shit Sherlock comment. Inflation could be higher or lower than previously seen. Thanks for that. Says forecasts are based on less solid ground than usual. And he's keeping a close eye on inflation expectations, which is important. ECB Lane expects inflation to remain close to 2% in coming months. Well, the latest ECB Eurozone CPI survey showed 1 year expectations jumping to 3.1% from 2.9% previously. I don't know if it's shown. Does it show on this calendar yet? I don't think so. Nope. So a jump there to 3.1%. It was estimated to drop to 2.8%. 3-year expectations, though, which could be classed as more of over the medium term, which is what the ECB like to look at, stayed unchanged at 2.5%. So there's different reasons for healthy discussion, shall we say, at the next ECB meeting. We got a story from the FT dropping a little bomb in, saying that Lagarde had apparently discussed leaving the ECB early to take over at the WEF. That was according to the current boss, Klaus Schwab, who said that comment according to the FT. An ECB spokesman was very quickly out after that story dropped to say that Lagarde is determined to complete her term at the ECB. Okay, what are we going to do if Lagarde leaves? Who's going to take over?
Oh, that's a good question. I don't know. We were musing about it. It's probably not going to be the Guindos because he has never spoken during a press conference, so he probably doesn't know how to start. I would suspect that she goes until the end of her term. But I think it's interesting to go to the WEF because going to Switzerland, it's going to allow her to keep up her her suntan, and maybe not as fake as it used to be. But no, I really don't know. I actually forgot to look up when the end of her term actually is. We will be maybe looking that up before the end of the show. It's a bit of a strange one. It's for sure not a level up to go to the WAF when you're the ECB governor. Yeah, I really don't know. Was the guy drunk or so when he declared it? I really don't know what to say about it, Ryan.
Yeah, no worries, mate. It's all a guessing game anyway, so it's not going to happen according to her, but you never know. There's no smoke without fire. Right, going back, looking at a bit of data from yesterday out the US. We had some house price data and durable goods. We'll start with durable goods. They came in less crap than expected, minus 6.3 versus the minus 7.6 expected. We had a big number last month, 9.2%. I think the flash number was. That got revised down to 7.5%, 7.6% after the factory orders, and then revised up a little bit, 7.6. This was a lot due to some big ticket items, aircraft, Boeing mainly in the frame for that. Hence those big swings, big orders going through, which can swing this data quite violently at times. So we've had a bit of a washout. So really we're no clearer on what's going on in durable goods, except moving forward. We'll see what the numbers bring from this point onwards. Core durable goods orders, though, rose 0.2%, so it wasn't all bad within that. House prices have had a little bit of easing. The FHFA house price index showed a 0.1% fall in a month. Year-on-year number coming down to 3.7%. The S&P case Schiller numbers also year-on-year for the 20 city coming in lower. And the national number also dipping as well to 3.4% from 3.8%. So we're seeing a little bit of softness coming into house prices. No surprise, seeing as rates are still quite high and the pressures being put on and all that uncertainty. However, the US consumer staged a bit of a bounce in confidence because the conference board number jumped to 98 from 87.1 expected, and well up on the 85.7 previously. Current conditions, that improved just slightly. Not a big, massive improvement there, 135.9 from 133.5, but expectations jumped to 72.8 from 54.4 prior. So maybe this data coming after we had all the headlines about easing tariff tensions and everything. It's the first report since all that. Shows a little bit of a better consumer at the moment. That needs to keep translating into good data, though. 1 year CPI expectations fell to 6.5% from 7% previously, so some easing there, which will be welcomed by the Fed. We'll see whether this bouncing confidence is dead cat or not. Fed's Barkin says the data shows the economy is on the same trajectory. Businesses are still largely pulling to the sidelines. Says people are being patient on investment choices. Government spending cuts are having an impact on employment, job postings, and that's particular in the DC area. It says consumers anticipate inflation, and that has hit sentiment. Says there's no evidence yet that this has translated into less spending. Fitzwilliams says inflation expectations must remain anchored to target. We must be aware that shifts in those inflation expectations could be detrimental. The entire curve of inflation expectations should be well behaved. White House economic bod Hassett says we will see a few more deals, probably even this week. Promises. Mexico Economy Minister Ebrard says that the USMCA review could start the end of September or first week of October. Over in Ukraine stuff, Kremlin was responding to all these possible new sanctions coming from the US. Says the report is a campaign aimed at wrecking Ukraine peace talks. Russia's one of Russia's war hawks, Medvedev says, speaking about Trump's comment that Putin is playing with fire, says he knows of only one really bad thing: World War III. Foreign Minister Lavrov spoke to an international security conference, saying we will announce the next round of direct talks with Ukraine in the nearest future. Says Ukraine's neutral status is one of Russia's key demands. Kay, are we heading towards a bit of an escalation, or these war words from Ukraine, Russia and Trump, or is this just a bit of chest beating before they sit down and talk?
Yeah, Trump would find it easier to discuss with Russia if they stopped sending all those drones over Ukraine and Kiev now as well, and they also seems to be doing some moves in the Baltic Sea now as well. I think whatever Trump would wish for, or the Russian delegations would wish for, I think Putin is showing that he's just not ready to give up anything, and he probably feels strong with China behind him. Let's not forget that Xi has still not called Trump either, and it just makes everything more difficult. The negotiations more difficult. Is this what people sometimes talk about, the final escalation before the de-escalation? Let's hope the de-escalation will come soon, but the requests that Russia is putting forward are a non-starter with most other parties involved. So I don't think we are anywhere close to an agreement that would suit everybody, unfortunately.
Yeah. So we just have to continue watching, waiting, and hoping for what's happening there. Right, let's have a look at. Sorry, Kane, have you got any other bits and bobs you want to bring to our attention?
Not really. We had a bit of a weakish employment change in Germany there. Just testifying that things are not yet completely green over in Germany either. May take a while. I do think somewhere that all those spending plans in Germany may have a positive impact on employment in over there, right? Once those spending plans will be put into place, that should provide a bit of work to a number of people over in Germany. But we will see in the next few months what the evolution will be there. Now, for the rest, there's nothing more right now.
Yeah, that will be the hope. We'll have to see whether it becomes the reality. We've got a bit of a quiet afternoon in the data. There's not really an awful lot coming out. We've got NBA dropping, and then a few small regional district numbers coming up, services, manufacturing and whatnot. Other than that, it's all a bit quiet on the data front. So we're going to be watching Mr. Trump on the toilet to see if he's going to drop any truth bombs on us and other headlines as far as that goes. Right, what's been going on? I'll leave Kiwi to you, Kay, because I know you're following that one, but I'll have a look at Aussie Kiwi because, as mentioned, we've had a rate cut and the Kiwi's gained on the back of it. We're back under the big magnet line, the 108 level, and we're already starting to hold below it, which is a bit of a negative sign for the Aussie Kiwi. We're tinkering with this 107.80s area, which we've played with recently quite a few times and beyond. So if that's going to continue, then we're going to see potentially a break there, and then we might be heading down towards this low area. But if the RBA is going to stay sticky with rates, that might be the influence that keeps this from dipping too far. We may get a rally again. Aussie dollar, in the meantime, we're still messing around this 64.40 area. It really is unresolved still. We had this big move above that washed out. We tried to hold it. Then we broke it, couldn't break it. Now we've broken it, couldn't hold the break. Now we're faffing around. I did have a little nibble into here yesterday, which I took a little bit off, but then got stopped on the rest on this move here. We're messing around this 50 fib, this old 50 level, 64. What are we looking at? 64.28. Call it 64.30. And we got this trend line. I think this is one you had, Kay, this trend line that comes from way back in October. And it just seems to walk along it when things are quiet. You get these little moves and it touches and it holds and it whatever. It's not really decisive, but it's come close enough to this 50 fib level as well now. So it's acting as a bit of support. Really wider picture, unless
63.90, mate. That I think is the short-term real level right now. As you say, are we turning around the 64.40 a bit undecided? But look at like 3-4 lows there in the past month, around 63.90. Yeah. I think that's the one that we should be keeping a close eye on for future moves.
Yeah, I think wider we're still looking at this 63, 55, 60, and on top you still got to look at the maybe even 64.80, but definitely 65s still, because we've had moves up there, but we can't get through it and hold it. And then you, as Kay says, you've got these more intraday levels, shall we say, to keep an eye on. If things are quiet, then you'd expect some of these to be respective, both sides up towards 64, 70s, 80s. But really the wider range, probably this area here, 63.5, 60s, and then up to 65s. But I'm still waiting to see, as soon as you start to get a real decent hold of this level, whatever side it happens, more than just a couple of day things, that's when I think is the time you go with the direction of whichever way it's holding. So if it's holding above and it's lasting for a couple of days, that's your cue to try along, almost like what we got here. Even though that failed, you still could have grabbed some pips out of it up to that 65s. But yeah, it's otherwise you look at a wider picture. This is probably the one of the longest periods of consolidation we've had for quite some time in it. Really is not doing an awful lot in this move here, but it's still keeping to a fairly shallow uptrend still on the wider picture. For that one, Ali, what you're looking at? Dollar CAD. Am I going to sell it at 139? Nope. I've got no reason to be selling it at 139. My level is 138, 60, 70. That's the level. If I was to trade, I'd look at. Yeah, 139 is a valid level, but this one is potentially the bigger one in terms of which way the market's going to go from there. But I'm not looking to do anything at the moment in the loonie. Just watch and wait and see what's happening with these swings. I'm expecting the dollar to swing around a little bit at the moment. We keep switching between this risk on, risk off, yield moves and all that sort of stuff going on. So I'm pretty neutral in a few pairs at the moment. I am long a little bit still in dollar Swiss. That got close to the 83 level, pulled up short. I had an overnight profit order in 95, couldn't quite get there. We're having a little pullback, just turning around this 60s level at the moment, which again is just another one of those little levels, short-term levels that we turn around sometimes. If it holds here, then potentially we get a push on to that 83 handle. Keep an eye on that 200 moving average there as well, because that's offering a bit of support just around the high 50s. If we are below there though, breaking back, then every chance we could head back to the 82 level. Just keep an eye on 82 30s, just a bit of intraday noise we might get on the way down if we go. But if we do hold here, 83s, take that out. 83 30s is the next level above, and then worry about it from that point. I know, Ali, you're looking at Euro Swiss, which Kay might have a butcher's at as well. Mate, I'm going to ping it over to you because there's not an awful lot going on at the moment.
No.
Let me get my right button. There you go.
Okay, so that Kiwi move, just going on to a smaller time frame, perhaps to just illustrate the move over there. We had that blip lower on the announcement, and then the statement and comments coming out less dovish than expected. We are bouncing, and what is interesting, though, in my opinion, here. So, okay, we are in this consolidation. We are in the consolidation in many pairs. I said yesterday that we went up to interesting levels on a lot of dollar pairs on Monday and then coming back. But what's interesting for the Kiwi here, I think, is that we left the big support zone, at least if you look at that traffic zone. We left the big traffic zone unchallenged, which in my opinion is slightly bullish. I've got a few of those running right now, but we are around pretty much neutral in the middle of that zone here, because we could say they did the same thing for the other side, right? Already several tops and always rejected. So I would say bit of range trading. We are trading value date end of month. There could be a bit of US corporate shopping for dollars. It is possible. The last months have not been very clear, but last month we saw a little bit of a last ditch flows going through just into the 4 p.m. London time. And I may use it to just reload if we see it closer to this zone. I'm relatively positive on this one going into the end of month. I'm also relatively positive on the Aussie going into month end, but only traveling light there. So you need to reply to your question. Yes, I'm still a bit low of the Aussie, but I'm hopefully waiting for slightly better levels to add. Ideally, I would get them somewhere around that 63.90 here, but I'm not sure if we are going to get there this afternoon. Cable did relatively similar as the other stuff. There's a bit of a support zone here, prior high. We went to have a quick look below and then bounced off it, trading back above 135.10. Bit of intraday resistance perhaps around 135.20, but really the bigger levels are still going to be 133.5 and above, and close to 136. 136 is really the level. If it goes, then I reckon we will have that quick move up into the 137s, okay? For as long as we are really above the support levels that I showed you. That Euro Swiss, I just don't know what to do with it, Ali. I'm leaving this one alone. I think Ryan picked up a really good level down at around that 82 in the dollar Swiss, but really the triangle in the Euro Swiss is getting narrow, more and more narrow. So perhaps somewhere into after month end we may see a break of 94 or a break back below 93.20, 93 and a quarter. For now, I just can't see what to do with it. I just think that Ryan, like, yeah, hit a very nice level there on the dollar Swiss. Euro dollar, we are still in a bit of a channel here. We had yeah, a small move below a very fragile trend line, too steep for my liking. It's still going to be 112.5, you know. It's been a level on its own. Now it's a level that shows up in the channel here as well. So that is still going to be the very important level. I reckon we find if we get back below here, you may have a quick stop run perhaps under 113.90 if we get one, but I don't see too much of a reason for it to break down right now. So if we would get a move down there, I reckon we are going to find buyers again, and until it really breaks. I mean, there's no reason to really go and trade for the break or to go look for the break. So that's how I look at the euro dollar for today. Dollar yen, as Ryan already. Ryan, have you shown dollar yen? I forgot.
Yeah, just a quick one earlier.
Oh yeah, okay. So you saw what the dollar yen was doing. All right, just to close for today. Gold again trying 3280s, trying, and we're holding once more. So that makes this zone increasingly interesting for the shorter term, I would say. I trust we are in a range unless something stupid happens going into month end. We just got for the little story. I was suspecting this already for months on end that there is month-end flows, month-end fixings in metals, and I've been looking for the confirmation, which I got. So don't be surprised to see any moves up or down into month-end on the metals as well. Okay, so yeah, gold 33, 40, 45, but then still while we're below this 33, 65, 85, I wouldn't go. Well, you can always like buy the dip and then go look for that level, but don't forget to take profits. Similarly, if you are selling against the area, don't forget what the market has been telling us, and that is that there are bids in that 32 80 90 zone. Okay, so I don't have a big preference right now on this. Silver, bit of a similar picture, triangle-ish trading, but it looks kind of okay still. If you look at the global picture, I think it's still looking kind of okay. So I would not be surprised this to go at least for a retest of that 33, 65, 70 with a bit of an additional level here just around 33.80s. But if we start to break above those levels, it's going to be positive again for a move up into the 34s. Why not 35s? Okay, it's looking for me. It's looking slightly more positive than what's happening on gold right now. So that is that's it for me, Ryan, for today. We're trading ranges. We don't know exactly what's going to happen on all those month-end flows. So yeah, let's keep it there for today.
Thank you very much, good sir. Good stuff as always. Yeah, we'll have a nice early one today, I think. Nothing wrong with that. So have a great day, everybody. Safe trading. Thank you for coming and supporting us here at the Flow Show. Don't forget to take advantage of that sale we've got going on the platform last few days. That's lasting. Have a good one, everyone. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.